Hello, entrepreneurs. Joe DeChara coming to you live from downtown Flushing, New York for another amazing episode of How to Win at Business. And tonight, ladies and gentlemen, I'm going to get to talk about my upcoming webinar against stealth tax strategies, how to save money on taxes, protect your assets, your family, your business, and fly under the radar legally. Now, let me get my bearings here. If you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay, because it makes me feel really good that people are watching. And if you're not watching, then you don't even know about this. So that would be unfortunate. If you don't know me, I am a CPA over 35 years. I work primarily right now with solopreneurs, brand new, mostly brand new women-owned businesses. A lot of women are going into business now, and what people don't know when they go into business, and I'm trying to find my controls here. Let me do this. What people don't realize when they go into business is that they are automatically at a major disadvantage, because you're basically you're considered what they call a sole proprietor. And this is what we're going to talk about on Tuesday, because being a sole proprietor is a very, very dangerous way to do business, and nobody really knows about it. Nobody really knows about it until you have a problem, like a problem getting audited, or a problem paying your taxes, because you have no tax benefits as a sole proprietor. So what we're going to talk about is ways to circumvent the machine. I call it the machine. It's not just the IRS, folks, that's the problem. The IRS actually doesn't do that bad a job, considering the volume of work that they have to do on a limited budget, on a very, very limited budget. And since COVID, they're even more broken. The system is broken, folks. And if you're not flying under the radar, if you're a sole proprietor and you're not doing your job, and when I say that is you're not running your business properly, it's going to wind up costing you. So we put together, when I say we, I mean my team and I, because I can't do any of this. You see this great graphic. I didn't do this. I do a couple of things really good and a lot of things okay, and there's stuff that I do that I'm just really bad at, and I guess that's like most people. So I decided to stick with the stuff that I'm good at, and this is some of the stuff that I'm going to be talking about. From setting up your business, and let me talk about this for a second, because there are millions of what I call accidental entrepreneurs, people that are actually sole proprietors and may not even realize it. You may be called a subcontractor, an independent contractor, an outside vendor, a consultant, a 1099. It all means the same thing. Those are just labels that are going to lead to a Schedule C sole proprietorship tax filing. So we're going to talk about, setting up your business, whether you know you're in one or not. So this is for people that don't even know that they're in business. Now, they are not going to be watching this, but you might be, and you might know somebody like an Uber driver. Okay, somebody that is in affiliate marketing or even network marketing. Those are, network marketers need to be incorporated. Otherwise, you're a Schedule C. You get a 1099 at the end of the year, and you're paying self-employment tax on that, and that's not a good thing. So we're going to talk about setting up your business, registering your business, because it's not just setting your business up now. You got to make sure you're registered with all the right entities, record keeping, the old, this has been going on. Actually, it was never even a question. When we got a client in the CPA firm, they were usually an S corp, unless they were in real estate rentals or some passive activity. But for the most part, they were either corps or S corps. And when LLCs came into the picture, I think it confused everyone. So we're going to talk about this, how to pay yourself the right way without incurring taxes. How about paying yourself with tax-free money? Okay, independent contractor issues, because this is going to be getting people in trouble. Writing off your family members, and I don't mean I mean for tax purposes. I don't mean like your evil aunt that you never want to talk to again. And I'll show you how to deduct your fish tank and more stuff that the IRS doesn't want you to know about. But what I really wanted to talk about tonight was the whole LLC, S Corp, sole proprietorship issue, because I think it's the most important. And if it's not addressed, it's what's going to get you in trouble. If you're in business, okay, you are either one of three things right now, Jim. You're either a sole proprietor, an LLC, but I'll tell you why that doesn't even matter, or you're a corporation. Now, if you're a corporation, you can elect to be taxed as an S corp. And it's my belief that just about every successful business owner in the United States owns an S corp, because it just makes sense. Unless you're a gazillionaire, and even then, I don't know. But for basic business purposes, most people should be classified as an S corp. Now, when people become an LLC, that's a tax classification. It comes with no tax classification, literally. So the IRS says, okay, we understand that you're organized in your state as an LLC. We don't care, because we don't have a tax form for an LLC. So this is what we're going to do. If you're a single member LLC, we're going to treat you as a sole proprietor. So there's a lot of people out there that think that they're protecting themselves, or they're accomplishing something by being an LLC. And you may, you do have that limited legal liability, and that's what it is, an LLC, limited liability company. It means that if there's a lawsuit, that your entity is separate from you personally. Lawsuits for small business owners don't happen that often. I mean, they happen, and that's why they should be protected. But the S corp gives the same kind of protection, the same exact legal protection as an LLC. Plus, you get tax benefits. You don't have to pay self-employment tax on the net profits. Now, you can be an LLC. Now, let's say there's two people in an LLC. Well, then the IRS says, well, then you're a partnership. That's a Form 1065. Okay? You can be an LLC and elect to be taxed as a corporation, which makes no sense to me, because all you're doing is you just added another form to your administration. So you could be an LLC. So what I do now is, when clients come to me as an LLC, there's a loophole where you can elect to be taxed as a corporation, going back to from the last year that you filed. So if you if you have an LLC and you filed in 2019 and you haven't filed in 2020, you could go back and say, oh no, I want to be an S Corp. And in the webinar, I will be telling you exactly how you can do that. So that's my story, over and out. Hope you can register. Hope to see you there, and I will be talking to you shortly.